Lemonade Investor Day is coming up Tuesday, November 15th, a couple days from now. I'm going to be there in person, and I want to share in this video why this day I feel is important and what we could expect from this day. It's an important day because Lemonade is still in a position where they could have massive potential upside. They could be massively successful, but they also definitely could still fail. And so it's a very pivotal time in the company where the stock is extremely low. And I just felt for myself it was important to be there, soak up as much of the information and company culture and personalities as I could. So I'm excited to be there for that during this pivotal time. And I really, myself, I want to try and gauge how sincere are the management, how sincere are the employees there, how confident and sincere are they in their confidence that the company could be success versus how much do I feel like they are trying to hide something from us as investors and engage. So ultimately, that's a major goal for me in going and attending Lemonade Investor Day is to gauge their level of conviction in the success or failure of the company. And of course, on top of that, I also want to be there, build connections with other Lemonade investors who are out there and management and staff. So this day is really important, I feel like, because they're going to be sharing more details around which way this company could pivot. And I've been asking for an investor day like this going back over a year ago. A year ago in Q2 2021, I asked a question related to this. I said, you previously published data on customers per human handled by Lemonade versus competitors. Is this metric the same or changing over time? Curious to hear how it is changing as you refine systems more and expand your product lineup. Thanks. Never was asked, didn't get a lot of upvotes, but this was related to how are their AI systems really performing? That's a big question. I hope we get a lot of detail about for Investor Day. Then you go forward a couple quarters to Q4 of last year. And this is when I first asked, hey, would you ever do an AI Investor Day as your AI systems, efficient administration, better underwriting, fraud prevention, etc., are a big part of the Lemonade bull case? It would give great confidence to long-term investors to see more under the hood details and metrics. Got quite a few votes, but didn't get asked at that point. And then again in Q1 of this year, 2022, I said, would you ever do an AI Investor Day as your AI systems are a big part of the Lemonade bull case? Basically asked the same question again. And I also said it could help attract AI engineering talent. I feel, too, if you reveal sort of why you're an exciting place to work, why you're cutting edge in this technology, then it could attract some good, talented engineers who are interested in expanding to come and work for you. And then that same quarter, Q1 of this year, I also said, would Lemonade release loss ratios on a product-by-product basis? So more specific question, could we see the loss ratio of renters insurance over time? And if renters insurance is just killing it at 60%, 55% or something most of the time, it would be insane. So it would be great to see that on a product by product basis. See what kind of that curve looks like over time. How bumpy is the curve for each product? Obviously, there's still going to be bumps in it as you have things like hurricanes, et cetera, but really be interesting to see that. And Daniel did answer the question, and he also answered the other one that I was asking specifically about an AI day. And he said, I do expect we will hold an analyst day before too long with a view to sharing a lot more information, both about our AI and about our byproduct loss ratios, and perhaps cohort loss ratios. So then he goes on to say there's also a real trade-off. We don't want to give too much information away because then our competitors might be able to kind of catch up or see where things are at. And then it wasn't until the Q2 letter that they explicitly said we plan to hold an investor day in November 2022, which we will fully unpack our path to profitability and show the leading indicators we use to run our business on a day-to-day product-by-product basis. These are driven by our machine learning models and lay bare the dynamics underlying our business and offer helpful and promising predictions for its future. Then they give some examples in Q2, and we'll probably see more detail like this in Investor Day, but hopefully and even more detail as they talk about how the overall loss ratio has overall declined over time, though it's still much higher than they would like, partly due to inflation, partly due to not being able to adjust pricing quickly enough for regulator approval fast enough. Then they talk about the lifetime value machine learning model. So I'm assuming we're going to hear more about this at Investor Day, is where they can predict on a customer by customer basis the likelihood of somebody to churn, claim, or cross-sell. And this is their LTV6 model. So obviously there's been 5 before it. I'm sure there'll be many more than 6 that will come after it. And it's predicting kind of a lifetime value for each customer. And it's basically saying, okay, we're discounting for all time value of money for each customer, all their premiums minus all claims adjusted for net present value. What is the what does that ratio look like for each customer? So I'm assuming and I'm hoping we get more details around this LTV modeling or machine learning model. They're also going to talk, I think, about sort of each customer cohort's loss ratio. So you think you have a pile of customers that they all take in a certain quarter or a certain time period, and they could break down cohorts much more detailed than we can see in their investor letter. But they're going to talk, I think, likely about how that cohort, at the beginning, you have a lot of people that are maybe make claims that are more likely to make a claim. If something goes wrong, they more likely have a claim in the first year or two, but then after a couple years, it starts to decline. Then over time, you maybe have really reliable, consistent customers out of that cohort that have very, very low loss ratios, very, very unlikely to make a claim out of the pool of people that are left. And those are really your best customers if they can stick around long term, especially if they can buy multiple products. I assume we'll hear some details around this. And using their LTV6 prediction, they are predicting that the lifetime loss ratio per cohort continues to drop over time as they partly as they have more customers inside of each cohort, and maybe as they can target the right type of customers to join in. And while in the Q2 letter, they were more specific about Investor Day, saying we'll fully unpack our path to profitability, show the leading indicators we use to run our business on a day-to-day, product-by-product basis. These are driven by machine learning models, et cetera, that we just covered. In the next letter that we just had last week from Q3, they said our Investor Day is slated for November 15th. If you haven't done so, please register. We're looking forward to sharing more about our financial and business results, what we've been doing, and our vision and expectations for the coming years. So the language here is a little bit less precise. They didn't really talk about in this letter, hey, the same sort of level of confidence. Yes, we will be profitable, and we're on this path to profitability that we're going to lay out. So it's a little bit more uneasy when you read that as an investor, that they're not so explicit. It's just more like, yeah, we're going to share some of our financial and business results. Yeah, well, that's what you do every quarter. So I'm hoping we get more details as we kind of talked about and walk through. And I think we will, but I'm hoping we get that. And this was just the language that was chosen. There was also a good post by Eric talking about Lemonade. You could check out that post, check out his account. But Eric also said it would be great if Daniel Schreiber and Shai Wininger could show some data on the predictive power of Lemonade's AI. You don't have to share how you do it, but demonstrate realized improvement over time, and predictive power would help a lot. And Shai said this was on October 18th, so about a month ago. He said we will share more about this in our upcoming Investor Day. And then I had a nice, fun GIF. Boom, getting us excited for Investor Day. So I do think we're going to get quite a bit of detail, and I am very hopeful we do, and I do expect we will. And I'm really hoping I get wowed by Investor Day, because there was some things, at least right now, how I'm feeling about Lemonade is a little bit more pessimistic right now after their last earnings letter and results came out. And why was I pessimistic? What are some things that are kind of concerning me? Well, one was customer churn. So the annual dollar retention in Q3 was 84%. But if you do the math, annual dollar retention is actually a function of how the cohort of customers from 12 months prior, how much of their premium is still intact. But see, the premium of those customers is increasing because the premium per customer is also increasing. And there's been a pretty big jump if you scroll up to the top here. If we look at premium per customer was $266, and now it's $343. So there's been a big increase in the amount of premium per customer. Now, if I scroll back down to annual dollar retention, so that on its own should push up the annual dollar retention. But because annual dollar retention only went from 82% to 84%, it's actually not great, for meaning the number of churn customers was quite high during that time. And I've calculated over 500,000 customers churned over that 12-month time period. And of course, that's 38% of the customers from 12 months ago. So if you look at the churn, it's been more like 30%, 33%. This is on a 12-month basis, 34, 35, 37, 35. So we've had some big ones, but now even at they're growing to a larger scale, they're still at 38%. And maybe, this could partly be because Q3 is a time of more transition, so it's probably easier to get customers and it's cheaper to bring in customers, but it's also likely a time when more customers are going to be leaving. So this is a customer retention. It's something that really has to improve over time if Lemonade has any chance of being successful. And naturally, Lemonade's products, things like renter's insurance that they have that are more of a niche product, lend themselves to having higher churn. So as they push out even into the places like the UK and they have more sort of renters like insurance products sold there, that could continue to keep this high, and that's okay as long as the customer acquisition cost to get those customers is relatively low. So a balancing act there, but I hope this would still improve over time. Another concern I have are their operating expenses, especially general and administrative expenses. They were $40.5 million for last quarter, $40.5 million, which is 30% of your gross earned premium. 30% of your gross earned premium. Now, they've still been high in that range, 21, 29, 26, 25, 24, 25, 23, 25%. So just huge, even though you would think over time, as your in-force premium and your gross earned premium is part of that, as that grows or increases, this should start to drop. And we're just not seeing the signs of that. It's even gone the other way. And I tweeted about this, that's 30%. Do you have any specifics? Measures, steps plan to reduce G&A spend? And Tim did respond to me. He said, one thing to note is that they have $7.4 million charge related to the closing of the Metro Mile transaction. So $7.4 million, I was aware of that. But even if you take that out, so 7.4, let me just do that here, minus 7.4. You're still at 33.1 million, still one of the biggest G&A quarters ever, and it's still 24% of gross earned premium. And I put this on a little graph here, gross earned premium. Just look at the first few quarters here from 2018 until we're at Q3. So if you look over the last, 2 years plus, from like early 2020, mid 2020 until now, we've been pretty flatline on general and administration relative to gross earned premium. And this is, of course, with a 7 million Metro Mile acquisition number, that one-time charge taken out. So pretty flatline. You would think, though, you'd start to see improvements. And this is my model after, of course, you must see improvements. If they want to be profitable and they want to have a huge upside, this has to get down to where this is like, 4% of your gross earned premium, not 26% or 30% as it currently is. And this is over the span of time that the in-force premium has done this. Basically gone from, maybe 130 million in-force premium to 600 million in-force premium. But the general and administration expenses as a percentage of this has not changed. It's basically risen at the same rate. Like, that doesn't make sense to me. Maybe I'm missing something, but that doesn't make sense. And if they don't turn that around, that is going to be a massive problem. It doesn't matter how. If you're paying 25%, 26% of all your gross earned premium out just to general administration expenses, it doesn't matter how good your long-term value or lifetime value of a customer relative to the cost of acquiring that customer is, because you're still going to be paying out. I don't think it's going to be better than still paying out 25, 30% of all the premium going to operating expenses. So that is I just wish that was starting to come down, but it's just still not where I want it to be. So those are some of the things I'm seeing. This entire model is available to my Patreon members. If you want to support the channel, please consider joining that. Give this video a thumbs up. Thank you so much for watching. Let me know in the comments down below what you're thinking we'll see at Investor Day in the next couple days. And enjoy. I look forward to meeting some of you there. And of course, remember, it's in the bag.